Let's talk new foreclosures. So keep in mind the foreclosure process is in 3 phases. The homeowner gets behind on their mortgage, the lender files that default notice, the auction is scheduled, and then the bank repossesses that property. In January, lenders started the foreclosure process on a little over 20,000 properties. This is up 8% from December. So the states that had the greatest number of foreclosure starts in January were Texas with 2,654 new foreclosures, California with 2,443, Florida with 1,898, Illinois with 1,228, and New York with 949 new foreclosure starts. Let's pinpoint some cities. So we've got Chicago, Illinois with 1,100 new foreclosures, New York City with 977, Houston, Texas with 932, Philadelphia, Pennsylvania, and Los Angeles, California. And if you are a homeowner behind on your mortgage, you guys, communicate with your lender. Please, you guys, ask for assistance. Exhaust all of your options if you are behind on your mortgage. If your property does go up for auction, request your excess funds.
Hedge funds are saying the stock market's going to crash, and the word recession is everywhere right now. Now, since September of 2024, I have been telling you that in 2025, we're going to see a recession. We're going to see the stock market crash. And in 2024, it was a terrible time to buy a home. In fact, I still think it's a terrible time to buy a home. But it's not just me saying recession anymore. It's all over the place. I was just a little bit before everyone, and not everyone with this size of clout can announce it as early as I can. Even JP Morgan is giving you the 5 reasons for recessions right now. And even the economists are saying we're at about a 70% chance of a recession. Now, I know recessions sound like the end of the world. The truth of it is you can't go through the unnatural growth we went through for the past 4 years without having a natural recession, which has happened many times in our country. We saw stocks grow like we've never seen before. We saw houses go up like we've never seen except one other time in 2008, which we know how that turned out. And we saw debt, our country's debt, Americans' debt, credit card debt. We saw debt absolutely explode. So there's going to be a natural correction. It's going to include a recession, a stock market crash, and kind of a reset overall.
Go down the list of the bad signs that I'm seeing. We've got home prices are completely detached from what income levels are. The prices are up, and people are still making the same amount of money, and they just can't afford these homes. High mortgage rates, they have lowered, but not enough. They've frozen the market. Sellers have low mortgage rates, and they can't sell their homes, and buyers can't afford the homes. And if unemployment rises, we could see a supply glut that could essentially drive these prices down, and we could see something similar to 2008. That's all the similarities with the real estate bubble of 2008, but the distinction is that we also have a commercial real estate debt crisis on the horizon,
right?
And that could really spell trouble for the market.
I just got off the phone with a gentleman who is 26 years old, who makes I'm going to say that, but I got information that I told him I was going to share. I said I was going to make a TikTok about it because this is what's wrong currently in the housing market, okay? Gentleman calls me. Young, doing great things in his life, and I did ask permission to share certain details. He's married, he has a kid, and he's looking to move to Delaware. Now, this person has flown through their career, done exceedingly well, and now between him and his wife now working a educational job making about 45 grand, their household income is going to be 165 grand. 165 grand. Now, both of them took on a little bit of student debt through college to get into their careers. Both own a vehicle, and both are paying for childcare for this child that you wouldn't believe what it costs to get a kid through preschool these days. I digress. So I have a conversation with this young man, and by the end of the conversation, I say young man like I'm 3 or 4 years older than him, but I have a conversation with this man who I saw a lot of myself in, and I remember being able to have that conversation with a real estate agent, buy property. I had to tell this man based off of his debt and based off of what he was making, based off a couple other questions that I won't divulge, that he would be able to afford a $287,000 to about $290,000 house based off some math that I was doing. Now that is vulgar. That's disgusting that somebody who's doing that well in their life, somebody who has that much financial awareness to get to that point in their life so quickly. Also, this person has reserves and has savings. It's not $1 billion. Obviously, they don't need a mortgage if they got that, but they do, and they've done so responsibly. They've gotten great jobs. They're working hard. It's disappointing to me that we are now in an ecosystem that is cool with, and a government, a situation here in the housing market where we're just fine with people not being able to have shelter. Like, these people have to move for their job. I'm telling them, you make over $150,000 and I can't get you a mortgage that's going to get you into a reasonable house in a reasonable area in a reasonable school district. That doesn't really seem fair to me. It doesn't sit well with me. And the problem with it is because that person now is looking to the rental market. And what are they seeing? They're not seeing a lot. They're seeing a lot of high prices. They're not seeing a lot of inventory available, just like home buying. And these people are now thinking, what are we gonna do? Regardless, the first home that you buy with your family, especially when you put your financial ducks in a row, your money ducks are all lined up in a row. That's that attention. At 26 years old, you and your family, and you're being told you can't get that first step done. You can't get your own slab of dirt here in America, here in Delaware. You can't get your own roof above your head. You can start putting equity into your American dream, your white picket fence and a dog and a kid and a half.
So where are all the real estate agents that were on here 2 years ago, 2.5 years ago, saying, oh, now's a great time to buy a house. Oh, you want to buy a house right now. It's a great time. And I said, no, now would be a lousy time. As a matter of fact, as far as 1.5 years ago, I said we are heading for a crash. And I've been talking about Texas and Florida for 1.5 years. And everybody said, what are you looking at? What are you talking about? I don't see, there's no problem here. Really? How are things now? Where's all the real estate agents that had all the great advice here on TikTok a couple of years ago? Where are they? They're not on TikTok anymore. I saw one of them, they're working at Lowe's now. So yeah, the next time you take advice from someone, make sure it's not a real estate agent. Because a real estate agent is just simply out to make a commission. They are not financial advisors. Because all those real estate agents that used to be on TikTok, where are they? Where are they?
What in the fuck is going on with this housing market? Are the interest rates gonna go down? I need some real estate people, realtors, brokers to help me out. The interest rates right now for a house is 6.5 to 6.7%. And that's with good fucking credit. I want to buy a second house. And I'm like, damn, I've been waiting for the interest rates to go down. They ain't going down. Do I wait and see if they go down? Or if I wait, interest rates can go up. And they probably are going to go up, y'all. They probably are not going to go back down. I know it's hard to determine because nobody knows. But does anybody in the stock market, Wall Street, real estate know if in the future they'll be going down in the next year, 2 years, or are we stuck and fucked? There is no way that a $400,000 house should cost $35,000 to $4,000 a month for a mortgage when the same house 5, 6, 7 years ago would have costed you about $1,500. Does nobody in these big offices see anything wrong with this? There's no reason why people are paying almost $2,000 for a 500 square foot apartment, a 2-bedroom, 1 bath. Are we fucked?
Did you hear the news? We might not be able to get mortgages in California anymore in certain parts. If you can't get insurance, you can't get a mortgage. And if you can't get a mortgage, that housing market is not going to be good. So if you listen to Jerome Powell speak, he said that insurance companies are starting to pull out of these natural disaster areas, hurricanes, floods, wildfires. They're starting to pull out. So if you're going to do a mortgage, you can't get insured on that property. What's going to happen to property values? Those property values are going to go way down. This is big. This is a big problem. So you need to be cautious on where you're buying a house or where you're thinking about buying a house. Because if you're buying a house on the coast and then in 5 years you can't get insurance and you have a 30-year mortgage, you'll have 25 years left. They actually can foreclose on that property. Now that wouldn't be good for the banks to own a home that's not worth as much money as it used to be. So this is something to be careful for and watch out for. If you're thinking of buying an investment property, a second home, or primary residence, if you're lucky enough to be able to afford to live in some of these places in California, Malibu, things like that, you may be forced to pay cash and then not have insurance. We haven't seen the worst of this yet, so be careful.
As of January 2025, the real estate market is dead. This is some stuff I got from Mike Zuber over at One Rental at a Time. He says that Mark Zandy over at Moody says that at rates at 7% is a dead market. No one is going to buy. Altos Research said, as of yesterday, 632,000 single-family homes unsold on the market. That's a lot increase from last year, so that's good. But will we have a significant increase of inventory if rates stay at 7%? I don't think so. I think it's going to freeze. I still go on my MLS and I see stuff that's been sitting for over a year. They just change out brokerages and keep the price the same. And yeah, it's just going to continue to sit for 200, 300, now even probably this year, 400 days now. I'm not saying this is every listing out there. I still think there's a lot of opportunities out there, but I've seen a lot of listings with wish pricing that is just not going to work. I think at some point, if rates stay higher for longer, maybe price corrections. In fact, Altos Research already talked about that. Mark Zandi also said that possibly rates may have to go higher, he said, in order to fix the market. I think 7% is doing its job. Fannie Mae thinks that by the end of this year, interest rates will be around 6.5%, and beginning of 2026, 6.3%. Also, existing home sales are coming out this week on Friday, where they said we're at 4.15 million, projected to be at 4.2 million. Mike Zuber believes we'll be under 4 million, and I'm going to side with Mike Zuber on that. I think transactions are frozen and dead. I also want to highlight something else Mike Zuber talked about on his podcast is alternative forms of money, Bitcoin being on equal footing with gold, something that he saw Ray Dalio talking about. I'm still not a big proponent of crypto. I know I'll be shot, but meme coins, do not buy meme coins. They're not worth it. Haktua coin, it wasn't worth anything. These things are just made up. They're not worth anything. Bitcoin, if anything, has at this point a proven track record. It's been like over 10 years. So yes, it does have big crashes, rises and falls, but I would only put so much money in there that I'm willing to lose. But something else that I do like to do is collect silver. Does it make a lot of money? No, it's just insurance for government stupidity. Overall, the people who are going to win in 2025 are those who are building affordable housing. If they advertise lower than average rates, if they're able to do interest rate buy downs and things of that nature, investors who pay with cash and are not tied to rates, they will make disrespectful offers and win those offers because, well, there's no one else out there buying. Sorry, guys, I'm still trying to get over this, but thank you so much for watching. It's going to be an interesting year. It's going to be an interesting market. I want people who are in real estate to not be discouraged. Yes, it's going to be a hard year. Do whatever you got to do to make money. And real estate always finds balance. Don't ever forget that. I started in 2010. It was a tough time then. It'll be even tougher later. Real estate will find its balance. And if you're gone, you're going to miss out on the opportunity. I'll talk to y'all later. Have a good day. Bye.